Thank you, Bernard. Good afternoon. This is JP Ong with a look at markets to kick off the start of this trading week, and a better start for markets here in Singapore and across the region. The Straits Times Index just very quickly up by about 12.2 points. We've seen intraday gains today, just a little bit challenged as we head deeper, as we near the close. But so far, we're still in the green by about 0.4% with the Straits Times Index at 3,127 points. Today's rally, though, coincides with the rest of the region breathing a sigh of relief after Germany indicated that they are willing to provide fiscal stimulus to an ailing economy, to the ailing economy out in the Eurozone, and also China moving to try to lower borrowing costs by the introduction of a new interbank rate. It's lifted the fortunes of markets across the region, with the Nikkei 225 closing in the green by about 0.7%, and also markets in Shanghai, Shenzhen, and Sydney all in the green, including that of markets in Hong Kong. Despite the fact that hundreds of thousands of protesters took to the streets again on Sunday in Hong Kong, it seems that the Hang Seng saw one of its best days in recent memory, with the Hong Kong benchmark rebounding by about 2%. But what really is the sentiment out in Hong Kong, and is the recent instability or political unrest actually affecting business sentiment in the long term? Or are we starting to see bargain hunters starting to become more bold out in Hong Kong markets? Well, to get a better idea of what's going on the ground there, I'm joined now on the line by Peter Chun, who's the founder of Silverbear Capital out in Hong Kong, to give us a better sense of what's really going out in Hong Kong. Peter, thank you so much for joining us, and good afternoon.
Good afternoon.
Peter, so let me start off with this. Since you are on the ground, you have a better sense of what's going on there and what businesses are thinking in Hong Kong. Can you give us your take on on whether or not the recent unrest has hit business sentiment and performance in Hong Kong lately, and if badly, how badly has it actually been?
Well, as everybody can see, this event has prolonged longer than everybody expected in Hong Kong or internationally. The result of the event has received now a international audience about Hong Kong and what had happened in Hong Kong. This immediately has put a very significant effect on the local spending pattern, plus tourism, which is basically part of the major income of Hong Kong, as everybody would probably understand. So, and you can also see that the Hang Seng Index has already spoken for itself about the past 4 weeks about how everybody, especially from the capital market point of view, looked at Hong Kong right now.
Okay. One of the sectors that seems to have been taking it a bit harder than most, some analysts have pointed out, is the property sector. As we know, property, a very important part of Hong Kong markets. Given, what is the outlook now for the property market and valuations in Hong Kong, given this recent unrest? Has this impacted property valuations negatively in Hong Kong, or is this just a bump in the road for a property market that seems to go from strength to strength every single year?
Well, basically, I mean, a lot of the property owner basically is rich people in Hong Kong. That's the good thing, because basically, unlike in the past years, whereby Hong Kong was hard hit on the property section because most of the property was surprised by the event, with everybody on a heavy mortgage. So once the valuation kind of fell below the original buying pricing, basically everybody's on the negative end. That surprised us, the whole Hong Kong at that time, a long time ago. But whereas actually now Hong Kong property owner is more kind of conservative, they're more confident in the long run. So basically everybody is able to be shaken by events like this. Now, however, I think as everybody can see right now that the property market is going down a little bit, especially on the retail end, because basically with the recent event on the road, on the streets, all the retail is hard hit. So as you can see, this is a vicious circle whereby nobody is spending on the street, and then basically the retail has to close, and this affected the property owner automatically, and then again the property valuation go down. So basically So, Peter, in your calculus, who do you think is taking it harder right now? Is it property stocks or retail stocks, or are they pretty much intertwined in taking it on the chin right now, given the unrest? Well, I would probably say given the strength of Hong Kong police reinforcement, I think nothing really bad would happen. So I think the property guys are still good, but the retail guys are really big-hearted. And of course, that's interlinked back to the property guy a little bit. But I think, to be fair, I think the retail guys hearted it more.
All right. And Peter, finally, before we let you go, we'd like to know, what is Silverbear Capital's approach to Hong Kong markets right now? Are you cautiously being averse to getting back into markets out in Hong Kong, or are you joining some of the bargain hunters that seems to be lifting Hong Kong stocks up after hitting its lowest in 52 in almost a year?
It's definitely a bargain hunting period here. I mean, the Hang Seng Index is now at 10.3 times earning, cheaper than Toronto, 13.7 times in Shanghai Composite Index. So basically, that makes Hong Kong key benchmark cheapest among Asia's major market on a price-earning basis. So basically, it's definitely a good time for bargain hunting. What Silverbear is actually looking at is bargain hunting in Hong Kong while looking for companies who has also a hedging component that's looking into the emerging market as well.
All right. We'll have to leave it there, but definitely some opportunities perhaps for the brave who might want to wade back in the Hong Kong markets. Peter Chun, founder of Silverbear Capital, thank you so much for joining us today on Primetime.